We're not quite 2 hours into trading on Friday, May 14th. Hello, traders who's had an exciting week, lots of market movement. Let's take a look at yesterday's pick and then we'll continue to move on. Yesterday, I highlighted a couple of shorts. Baba was one of them. And you can see Alibaba breaking major horizontal support. Let's go into that 5-minute chart. This stock was weak most of the day. Video came out here. You can see that the stock did actually drop even further during the course of the day. That was a very nice short for us. We had been getting short that almost from the open after that earnings announcement before the open. And BILI was another really nice short. You can see BILI is really jumping higher this morning. In fact, a lot of the oversold stocks are really popping this morning. But video out here, very nice short, probably about a $5 move lower yesterday. Boy, we're all over that, but once it found support, I was quick to take profits. The nice thing about trading on the short side right now has been that the movement is very sustained. This is something I've been mentioning during the course of the last 2 weeks. You don't see that type of price action on the upside. Typically, you don't get follow through a nice, tight price action like this on the upside when the market was near the all-time high. On the downside, though, be it tech stocks or Chinese stocks, once this selling momentum started, it was so steady and the little bounces were so small that you were able to stay with the position without getting shaken out, and you didn't have to be real active. You could simply ride the trade. So once you get this type of formation and the open from that long red candle is breached with a long green candle, it's time to take profits. Once the orange line is above zero, relative strength, it's time to take profits. So that's what you have to watch for right now. BILI got plenty of relative strength, really nice price movement. So it looks very strong today. I've also been telling you that we are trading from the short side on a day trading basis. Why? Pete, if you're bearish and you think the market's going to go lower, why? For exactly this reason. Look at the rally that we've seen in the S&P 500. Everything looked just awful. If you go back to Wednesday's price action, looked like the market was not ever going to rally. And then, boom! Yesterday, we get a 40-point rally, almost right out of the gate. Today, follow through buying. So, what do I think the market's going to do from here? Well, if I go into the daily chart, which by the way, we've got resistance right here. Let's drop the alert line. We're going to click on the high from Wednesday. And actually, we're already through it. So let's confirm that with a crosshair tool. Yep, we're already through it. So market's going to start filling in some of this gap right in here. And as far as the 10p indicator is concerned right now, it is moving higher. So you can see nice tight compression. 10p indicator moving higher. We've got a bullish cross there and there. So it has maintained its bullishness. If we get a nice big spike and a rollover, then we have to be cautious. Then we have to look at taking profits on some of our long positions, but we're quite a ways from that. I believe we're going to continue to grind higher for today. On a daily basis, what's going on? We had this tight compression here. The market could not break out on really good economic news, great earnings news, dovish FOMC. None of this seemed to entice buying. And then we get this nice big drop, and we have some concerns right now on rising inflation. So that is going to weigh on the market, I believe, for at least the next couple of months. Inflation is not one of those things that you can get rid of with a stroke of a pen. For a while, we're waiting for the elections. Okay, well, that's going to be resolved. Then we were waiting for the stimulus bill. Okay, well, that's finally been resolved. Then people had their checks in hand. So those are all temporary events that can suppress the market for a short amount of time. Inflation is something that's going to be around for a long time. Those supply disruptions are not just going to go away. I would rather see inflation because of increasing demand, but we're seeing inflation because of supply bottlenecks and shortages. So hopefully the demand side will be there, but higher inflation can actually suppress demand. If you think about home builders, if you think about people doing remodeling projects, when the price of lumber doubles, they hold off on those projects until the price comes back in line. I believe that we are going to have a nice little rally in here. It's been very, very easy for traders to buy the market when it's dipped to the 50-day moving average. And so we'll put up the major moving averages here, and you can see how every time we've touched the 50-day moving average, boom, buy, boom, buy, buy. We're seeing the same thing now. I believe we're going to have another retest of that 50-day moving average, perhaps as early as next week. We're starting to see TLT, the U.S. 10-year treasuries, all treasuries trade lower. You can see we had stiff selling here in bonds, which means interest rates are on the rise. We have this upward sloping trend line that's been breached to the downside. 50-day moving average on TLT also breached to the downside. This is a bear flag formation, in my opinion, and I believe we're going to see additional pressure on bonds, even though the Fed says we're not raising until 2023 at very earliest. Many analysts are thinking that the Fed is underestimating inflation. One of the biggest components for inflation is hourly wages. That is the largest input cost that companies have. We saw a 0.7% increase in wages in the unemployment report last Friday. That is problematic. We also saw McDonald's raising their minimum wage to $16 an hour. So you can expect that costs are going to be going up for companies. That means that profit margins go down until they raise prices, which is inflationary. Raw material costs are all higher, whether it be grains, lumber, oil, all of those raw materials are going up in cost. Iron ore, copper. So those are the stocks that I think you want to be in right now because they are benefiting from these inflationary pressures. Keep an eye on TLT. The other thing that we want to keep a very close eye on, and I highlighted this yesterday, is what's happening in Chinese stocks. China's economy has been open about 8 months before ours. They should have a full head of steam. They should be roaring ahead. Well, why is its market in bear market territory? This is a 20% correction off the high. Yes, some of these Chinese stocks are bouncing today, but I believe it is only a bounce. You can see how major horizontal support has been breached. So day trade those stocks on the long side. I would not overnight those swing trades. Same thing in tech. We're going to see a ton of tech stocks that have been badly beaten down rallying today. I would be super cautious holding any of those names overnight because I feel inflation is going to pressure bonds. And if bonds are down, interest rates are up, tech stocks are going to have pressure on them. So I would not rush in and buy tech stocks thinking that this is your entry point. As far as the market, I believe we're going to trade between SPY 420 and SPY 400 this summer. And I think we're going to go back and forth. And analysts are going to be waiting to see what happens with inflation. Did the Fed get it right? Did they undershoot? What's happening with prices? Are some of those supply disruptions being resolved? What is the underlying demand? We had retail sales come out today. Analysts are expecting a 1% increase. Zero. Flat. Where's the pent-up demand? The economies are opening. We should have seen gangbuster retail sales this morning. Michigan, consumer confidence number came in much lighter than expected. I believe the reading was somewhere around 83. Analysts are expecting about 92. One thing that they did survey consumers on is what are your inflation expectations? The highest in a decade. So people are feeling higher prices right now. I think that keeps a lid on the market. We saw tons of fantastic news come out right here when tech giants were reporting earnings and major economic releases were coming out in the FOMC statement. Market could not rally. I don't believe that this dip is going to do anything to excite buyers. We're going to get a nice little bounce, and then I think we retest that 50-day moving average. This is a good time to nibble if you are a swing trader. And yesterday, out of 6 bullish put spreads that we tried to put on, we were actually filled on 5 of them. Bullish put spreads allow us to distance ourselves from the action and to take advantage of accelerated time premium decay so that if we do get the next little dip, and it takes a little bit of time for that to happen, that's okay because time premium decay is already working in our favor. Plus, we have excellent entry point. Plus, we have time decay working in our favor. I think bullish put spreads are going to be the way to go on that next dip. So if you didn't get any off yesterday, do not chase. Remain patient. You will get a second opportunity. I believe perhaps as early as next week, maybe the week after. So let's take a look and let's see if we can find some stocks that we like. We'll go back into the 5-minute chart and I'm going to go into and watch. Market should continue to float higher as long as this 1OP indicator is going higher and it has not crested. We should see the market continue to float higher. Let's go in and find some stocks that we like. I'm going to go into Pop plus Bull. These stocks were on Pop Bull yesterday and they are on it again today because they are trading higher. So hey, remember me? You had a shot at me yesterday, but you didn't get long. Here's your last bite of the apple. So this is a really powerful search. I'm going to just flip through some charts. AMC I view more as a short squeeze. Yes, theaters are reopening. Long-term downtrend, breach to the upside. Horizontal resistance breached. Big volume. Really nice price action yesterday and follow through today. So yes, day trading wise, I like AMC, PRTY. Nice breakout there through horizontal resistance. Go, go. This actually looks good, but it's not a big mover. You can see nice upward sloping trend line here, higher lows, and through the 100-day moving average. Looks pretty good. Decent relative strength in here. Just going to continue to go down. STNG is a choppy little stock, but I love compressions like this with a breakout to the new high, but tails above body. It's got to clear that and close near its high for me to be interested in that. CRIS, very interesting stock, breaks through this horizontal resistance, long-term horizontal resistance, huge long green candle closing on its high. That was on an earnings announcement, and it's been able to hold the breakout and the halfway point of that long green candle. The longer that this stock is able to hold right here, the greater the chances that it's going to start inching its way higher. Yeah, I like CRIS. I think that's going to be a nice one. Continue to go down the list. Oil stocks have actually done very, very well. You can see SLB, Schlumberger, breaking out to a new relative high. I really like this pattern. Big volume, excellent relative strength. Boy, that's going to be hard to beat. That is a really nice chart. I like that one. Take another look here. I like T-Mobile. Look at this breakout. That's beautiful. Stock rallies up, breaks out, comes back, checks the breakout. Now it's off to the races. If you don't mind a little chop, I think TMUS works very well also. Goldman Sachs, a lot of the bank stocks are moving higher. They also look good. PBR. This is going to be my trade of the day. Here's why I like it. The stock has been hit pretty hard, and you can see how it is above the 200-day moving average. That was also horizontal resistance. You can see a series of higher lows. That's good. So it's got an upward sloping trend line. You have relative strength. Energy sector's been strong. I love this breakout. Yesterday, earnings before the open. Test the 200-day one more time, and then boom, breaks through the 100-day moving average, currently trading on its high, and it still has room to close that gap right there. Cheap little stock. I like being long PBR. I think it's one that you're actually going to be able to hold for maybe a few days as well because it's in the basic material sector. PBR is your stock for today. Let's take a look at the 5-minute chart. Nice. You can see how all the gains have held and the stock is continuing to float higher. So I wouldn't be in this for super long amount of time, but I do think that the stock's got a chance to get up to maybe the $10.25 level before it starts to hit any resistance. On a $9.64 stock, if you can make 50 cents on that, that's a super nice return of about 5% in a handful of days. That's your pick of the day. Have a great weekend. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.